your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Difficulties here. I'm not able to get in touch with Bill Meridian today.
Hello.
Oh, Bill's there. My gosh, Bill, I haven't been able to get. I thank you very much. Can you share your charts onto TFNN, Bill? Because I'm not able to get into that program. They're not recognizing me. I can get on Skype, but I can't get into Discord for some reason.
They've sent me messages, and I've already shared the screen.
Great. Let's go ahead and tell us what you're looking for, because I've got 4 or 5 of my relatives from Indiana listening in today because they like to hear what you have to say. Go ahead, please.
Okay. Well, as always, a reasonable probability is the only certainty. So, key questions. When will investors in the markets react to the deteriorating underlying fundamentals? Excess credit creation has been more than making up for the crumbling fundamentals. In other words, if you put in enough money, it papers over the deterioration in the fundamentals. How long will this continue? Period, as you, Larry, will remember, is much like the 70s when equity markets fell, prices rose, the economy suffered. Real estate went into a recession forecasted by the 18-year real estate cycle, which hit its high last year. A weak Democratic leader, conflict with Iran, and general chaos. So this is the economic cycle straight out of my book, Planetary Economic Forecasting. That was, forgive the grainy projection, but that was in the back of clackety-clack daisy printers when we had DOS, which for the younger people out there, these were steam-powered computers. And that was a projection done by the 6-cycle composite. That's where the data ended off. So it forecast the real estate bust, which was in 2007, 2008. And then I said there would be a period of stagnation that would end in 2016, which coincided with an acceleration phase in the real estate cycle and the election of a Republican, more business-friendly president. So this is straight out of the book. And now I've updated this. This is that cycle you see on the top with the gradation like 102.5, 100. This is its extension, and you'll see that it topped back in Q1. So is the economy slowing down? Well, according to this cycle, yes. So let's move on now to 2025. When does it bottom? Well, it bottoms in the third or fourth quarter of next year. So when you do cycle projections like this, like back here, it's, young man, why would the economy stay flat here? I was asked in London about this cycle, and I said, well, if you elect somebody who's not business friendly for about 8 years, that would fulfill that prediction, which is what happened. 2008, 2016, 8 years. 2016, we get a business friendly president. So. Is the economy actually slowing down? Most new jobs are government jobs. You see the green? The green is the increase in government jobs. The red is the decrease in job openings by industry. And money placed in the hands of individuals is always spent more wisely and is more productive than the same money in the hands of government. It was Dr. Christina Romer, R-O-M-E-R, PhD in economics. Her paper more or less proves the point, and she was part of the Obama administration until she mentioned this at a speech down in Texas, and about 3 weeks later, she was out of the administration. So, I mean, we don't need a PhD. I think common sense tells us that people spend money better than governments do. So, recession news 1. Only 65% of industries have gained jobs in the past year, closing in on levels associated with recessions. So this is a reflection of that. Industry is not creating the new jobs. Recession news. This is housing, urban, and development. This is delinquencies in unemployed people. Reason for delinquency, I'm unemployed. In other words, I can't make my payment because I'm unemployed. Can't make my real estate payment. So that is another indication. Recession news 3, excess savings by income level. Well, let's go 2020, 2021, 2020. What's this? 2022, excess savings. That's not excess savings. That's people are spending more. And you'll note it, 2023, it just keeps coming down. So people are dipping into their savings and putting things on a credit card, which I don't think I have to tell you. I think you already know this. Recession news number 4, 6.7% of housing listings had price drops. So that's 2021, 2022, 2023, and here we are, 2024. And that's up till about a month ago. So we're expecting, real estate is very much a mixed bag. I think I mentioned last time that Toll Brothers was offering a discount on a house and a guaranteed lower rate. Still a high rate, but lower in order to boost housing sales. They're building all around here, in New Jersey. So it looks like this cycle is going to be right. The delinquency rate of office CMBS loans, in other words, delinquency rate on commercial real estate, on buildings that are owned, all going, the same thing that happens at the beginning of any recession. And I did not want to repeat the same graphs, but it's the credit card delinquencies. People are slower on repaying auto loans, and so on and so forth. Exactly what you would expect to see as the economy slows. Number 6, new swimming pools. New pool constructions are plunging lower from 117,000 in 2021 to 60,000. That's about it's a 49% drop. So obviously, if you can't afford a home, you're not going to put a pool in. And I think this is all over the news, so it's not anything that you don't know. Now, here is the most basic idea to keep in mind. And again, apologies for the blurry chart, but this is right out of Ray Dalio's book. And it was the best copy I could get. But that is the central bank or the Federal Reserve balance sheet. So in other words, starting back here in 2000 and it looks like 2004 or so, they've been adding and adding and adding. And every time they add to their balance sheet, they are buying something and they're injecting funds into the system. For example, years ago, they were paying 100 cents on the dollar for Mexican bonds that were worth about 10 cents on the market because Mexico had defaulted. So they did that to keep them afloat. They could buy up the American Express bills of all of us, of everybody listening right now, and put it on their balance sheet as an asset. Is it an asset? Not really. And they inject that way. They inject funds into the system. So if you want to know what's keeping the markets afloat and why your food and gasoline and virtually everything costs more, is because they're stuffing credit into the system over and above the demand for money. And we have to sell something.
We have to sell something. Bill, stay with us.
Put those inflated dollars in there. Yep.
Bill Meridian, folks. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information in one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, with Bill Meridian, Cycles Research. Please continue, Bill.
Yeah, so this graph tells you why everything costs more, to summarize. Now, too much money leads to crises. These are real house prices and rents indexed in Amsterdam, Netherlands, and it goes back to 1620. That's right, 1620, 400 something years ago. And I mean, if this were a stock, Larry, I mean, this would be a huge base, and this would be a breakout, and we'd be bullish. But that is why these prices are rising. In case it's not that the prices are going up, each individual monetary unit is going down because too many of them are being printed well over and above the need to transact business. That's one effect. Now here's another one. A Winston Churchill cigar butt is for sale. Estimate 800 to 1,200 pounds. And if you want to buy it, you missed it. It was last July. It was 2 years ago in July. But people have money to spend on Winston Churchill cigar butt. That's what you call excess funds in the system. And also a Honus Wagner baseball card sold for $7.25 million. If you like baseball cards.
Are you kidding me? $7 million?
Yeah, $7 million. Yeah. Well, remember the Mickey Mantle one I showed a while ago?
That was $4 million. Yeah, $4 million. Yeah. But do you get gum with that or not? Did they take the gum out?
I think the gum's already been chewed up.
Go ahead, partner.
Okay, Harry Potter cover art fetches record price of $1.9 million at auction. If there's enough liquidity to boost prices of a Harry Potter cover, then there's enough money to keep the stock market inflated, which is what puts the air under the market, just like it does the price of everything else. And too much money leads to crisis. This is the average electricity price per kilowatt hour in San Francisco. And again, if this were a stock, you would say, well, that's a consolidation, and look at that breakout. So I don't know what would bring it down, but if we were looking at this as a stock, we would say that that's going to start to collapse. So I don't know what will happen to bring that down, but that's the current state. Now, here's some good economic news. In Argentina, inflation is down to 4% from 25.5%, which shows you that you can actually reduce the cost of inflation because the new Argentine president, one of the few people in the world with his head screwed on right who's leading a country, simply started shutting down government agencies and letting the money recycle, back through the economy in private hands. So it is possible to solve these things in a very short period of time. Now, we got electricity again. Oops, I'm hitting the button the wrong way, sorry. So the market is like, I said, each time I've been on the show since January, I'm projecting the market will be higher in January 2025 than it was in January 2024. The tech sector has been the heaviest weight of the indices, as you know. It was so extended that there was a gap between the leading sector, which was tech, and the rest of the market that was the widest in 100 years. So it wasn't your imagination. That's where the excess money was going. I think the market is currently in a rolling correction in which funds are leaving tech and going to sectors that had lagged, of which there were lots of them. Now, most stocks have now rallied. It's the percent of S&P 500 members outperforming the S&P over the past month. Look where it is. It's higher than at any time since it was down here. So that is the money circulating out of tech. I know I was a fund manager. It's got to go somewhere. If you sit on cash, you get a phone call from upstairs wanting to know why you're sitting on cash. If you don't want to invest it, somebody else will. So the S&P is now very extended. That's the rate of change, 12-month rate of change. So it's up near where it was in 97. Now here's the seasonality that we're running into. NASDAQ tends to peak in July more than any other month. I think we all know that. August and September are weak. The average high in any year, if you average everything out, is a September 5th. The average low was October 27th. That was in Robert Colby's Encyclopedia of Technical Indicators. In fact, he said if you could have shorted the Dow historically, looking back, you could have outperformed buy and hold by 3,000% just by shorting that time period. Since the book was published, a lot of people now know 9.5 is the annual high, so they start selling in August or even earlier. So is this a longer-term buy signal? I think it's a sign people can't time markets. Fund launches, industry growth. Look at that. It hit a peak of 1,000 for new fund launches in 2010, and we're down to 172. So that, I think, is a positive sign. Now, here's the Dow Jones Industrials monthly histogram, and you can see where we are here. July, August, this is 138 years worth of data. You can see September, October. Actually, October usually closes on the upside.
Wow.
Here's the average Dow Jones. This is skip that one. This is the average performance during the year. The average high since 1885 has been September 9th, the average low October 12th. But the Dow did rise 45% of the time. So it is not, 45% is very different from the usual 60, but it is not the end of the world. So that's the headwinds the market is sailing into. And momentum remains favorable. If you remember, I presented this last time, when the S&P has been up at least 10% at this point in any year since 1928, and that was, I think, at the end of June. That was the end of July, I think. Here's the month-by-month performance in the remainder of the year. Well, it's up 2 times out of 3 in each and every month. So because there's a momentum, you have to remember this. A lot of this is caused by institutions. When I was in graduate school in 71, 2, whatever it was, the professor said institutions will come to dominate this market more and more. And these waves in the market are caused by their positioning, because they control so much of the market. Now, July 11th was a huge down day. This is unbelievable. Look at this. Advancing stocks, 2,400 declining 405. New highs, 279. New lows, 9. NASDAQ, 3,200 stocks up, 1,000 down. 285 new highs, 65 new lows on a big down day. What is that telling you? Exactly what I said. The big tech stocks have the heaviest weighting in the index. They pulled the index down, but the rest of the market held up. I couldn't believe these numbers when I saw them. Now, the numbers point, this is the same that day. The NASDAQ down 2%, S&P 90 basis points, Dow Jones 48 basis points, but the Russell was up. The New York Composite was up. The Barron's 400 was up. The Dow Jones was just flat. Here are this again is all on that day, on the 11th. Communication services, 2.56% down. Information technology, 2.74%. Look at the others. They're green. Those were the two leading groups. Consumer discretionary, of course, you're not going to be buying at your discretion if the economy is slowing, which I think it is, and consumer staples is mostly food stocks. So you can see how the energy area, materials. Okay.
Yes, sir. Well, stay with us, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, speaking with Bill Meridian, Cycles Research. Please continue, William.
Hi, Larry. This is the usual cycle summary. The three most basic cycles. The one-year cycle in red is the annual cycle in any year. The 4-year cycle, they call it the presidential cycle. It's really just a 4-year cycle. And the 10-year, which is called the decennial. And below that, you see their addition. So you can see that it is not really forecasted. It's still forecasting a strong August, despite the sell-off that we've had. And there is the Q3 blown up so you can see it a little better. And as you can see, it forecasts the usual weak September. So this is a bit problematic in calling an end to this correction because we're sailing into stormy waters, but I'll let you know what I think is going to happen here. This is where we are right now. We've come down, which might be A, B, C in Elliott terms, or 1, 2, 3. How will we know? Well, if it crosses above that 38.2% line, which I think is exactly where it is right now, which is 53.30, that's the first red light that the correction is over and it's going to continue to rally. And if it gets up here, which is 5,400, it's encroaching on this first wave, which is a no-no in Elliott terms if you think the market's going lower. So the market could very quickly negate the bearish prospects before the market closes today. I don't think it's going to do it. I think it's going to hang out there. And I have an indication that the NASDAQ will turn down. But I don't know how serious it will be. But if you look at the S&P, it came close to a 38.2% retracement of the rally from October. Let's look at the NASDAQ. It hit that's the 50% mark. It's that's the close-up. Excuse me, 38.2% retracement. You can see it better here. That's 53.30 right there, and that is 5,400. If it closes above those, it's likely going higher. Here's the NASDAQ, which hit the 50% retracement level of this entire rally, and it's at the 38.2% level is right here at about 16,700. And if it goes above this level, which is about 17,000 right in here, then it's encroaching on the prior wave, and the bear will go into hibernation for a little while anyway. So now here's the value line. This is the equally weighted index. Look at that correction and look at this one. That means that's 1,700 stocks equally weighted. That means most stocks haven't had much of a correction at all because they were already down. But we are going into a weak time of the year. Everybody out there knows this one. The 6-month period from May to October, down here at the bottom, is the weakest. And that's where we are. And tech is overvalued. This is the tech PE ratio is up at its 2020 highs, nearly 30 times earnings. So fundamentally, this would be a vulnerable area. And weak months for technology. Now, this is 26 years worth of data. It usually, tops in July, has a weak August, and really gets clobbered in September, but rallies back in Q4. Now, here's the Cycles Research Stock Screener. And this is the seasonal rank and the relative strength rank. Now, this is why I still have Apple in the portfolios. I have not sold it because it remains strong. Triple M, I added. I'm still holding it. And look at these other. I own Coca-Cola, Procter & Gamble. Do you know that, Larry, Procter & Gamble rallies from the first week of August to the last day of December about 90% of the time?
Oh, my God.
The number 2 and 3 to that are Archer Daniels Midland, 78%, and Automatic Data Processing, about 80%. Talk about seasonality. Those are real extremes. Wow. So this is the way I screen stocks to try and find some to pick. And now here's Triple M, which was selected, and here it's ranked number 4. I bought it just before earnings right in here. And look at this. Weekly, this is price, momentum, relative strength. Daily, weekly, monthly, 3-up chart. There's a reversal of the downtrend line, higher lows in momentum, reversal of the relative strength decline. Here's a reversal of the relative strength decline that goes way back to 2018. Is this stock overbought? No, it's at the zero line. How many stocks are not overbought? This is where the money's going. This is one of the biggest holdings that I have. Okay. And you can see it's number 4 here. Apple, I'm still holding on to. Amgen, I haven't looked at yet too closely. Now, these are the strong stocks in the S&P 500. NVIDIA is like the Yankees of the 60s and 90s. It's been in first place since last autumn, no matter how much it declines. In other words, it's the fourth best performing stock next month in September, and right now it's 13th in relative strength out of 500 stocks. Then we have it's Motorola. Is that Motorola Solutions? The old Philip Morris, NetTap, Fiserv, Newmont Mining. So let's go. This is the reverse end of that. Ford, Dollar Tree, that's Dentsply, Sonoma, I think. That is Southwest Airlines, Estee Lauder, PPG, the chemical company. Boeing, with their noted problems. Nucor, the steel company, and Disney with their problems. UPS, economy-sensitive stock. This is where I would look for short candidates. And if you take the top 5 bullish stocks and you buy them and the bottom 5 bearish and short them, you've outperformed many times over the last, I think it's 3 or 4 years. I've run this back now. So these are basic. Now here's strong stocks in the NASDAQ. What's in first place again? NVIDIA. And second to that is Charter Communications. Meta stock, the old Facebook, is that, I can never pronounce this. It's a foreign stock. Anyway, it's in a foreign country. I don't know, Vertex Pharmaceuticals, Electronic Arts. We see Apple down there. So in other words, NVIDIA is number 1 in relative strength, despite the correction that it's had, and it's number 3 for seasonality. So in other words, in the month of September, this stock has been the third strongest over however many years NVIDIA's been trading. So weak stocks. Dollar Tree, again, is at the bottom. Moderna, which thank God I sold down on its first break. Sirius, and then X-Ray again. Marriott, Cracker Barrel, which I've been short for a while. Henry Schein, Micron. So you see what's happening. Now you're starting to get like Micron and Akami, a semiconductor stock and a software stock at the bottom. In other words, technology will continue to go up, but only selected technology stocks. My favorites are NVIDIA, Apple, and the old Facebook, which is now Meta Platforms. WBA, Walgreen Boots. I have been short this stock. I'm up about 50, 60%. I went in there for service the other day, and I came out and wished I was short more of it. I don't know if they're going to stay in business.
I don't know either. Same thing here. Same thing here, Bill. Hey, stay with us, folks. Bill Meridian Cycles Research.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Bill Meridian, Cycles Research. Bill, I have a question. You remember you sent me yesterday some things about the potential of the war between Iran and Iraq. Could you go into that? Would you mind?
Yeah. By the way, how much more time do we have?
As long as you want, pal. Another 18 minutes.
Well, okay, let me finish the markets, and I was planning to do that.
Okay, good.
So this is from the last June. When I spoke in June, one of the stocks I picked off that list to short was Intel, partially based. This is the old June, well, that's late May. And that was the result.
Wow.
So it was weak in relative strength. It was weak seasonally and crash. You know, it dropped, what is that, about 33%, 40%? Yeah. So we're going to do the notes and oil real fast. The essence of Cycles Research is I started out with the Arthur Merrill type approach looking at seasonality. What you're looking at is the 12 months, 42 years worth of data on the 10-year note. The red bar is the odds that it will go up in that month, which is, as you can see, 67% for August. It's about 60 for July. The blue bar is the percentage gain, percentage change, I should say. You can see it's about 50 basis points here for July, and it is almost 75 basis points for July. You can see how weak March is. That's a loss of about 75 basis points. The green bar is the multiplication of the first two numbers. It is the expected return, which is what I look at most of the time. So anyway, as you can see, we're in the strongest 2 months for notes and for the 30-year bond. And this weakness in September, that's all concentrated in the third week of the month. So now that's the annual cycle. What about every other cycle? Well, that answers the question. This points up, that points up. I would say the odds of higher notes between now and the first week in September or middle of September are about 70%. Because this is the one-year cycle. That's all the other cycles that this particular method will vacuum up when you run the test. Here we have the reverse. Oil is in its weak seasonal period. As you can see, it's up. Strange, but it's up about almost 70% of the time in July, but not for a very high return. The returns are much better out here in April and May. And look at this. Now, this is Bermuda Triangle for for oil bulls. Nothing will save you from that. I've tried all sorts of stuff, like if it goes up in September, down in September, if the trailing quarter is positive or negative, it declines no matter what. So long bonds and notes and short oil. And now there's the monthly oil cycle. It's the reverse of that situation. But this is the basic thesis of Cycles Research. So oil monthly, as you can see, it doesn't really have much room to fall. It's like the old Woody Allen joke where his uncle lost his money in the stock market crash and was trying to jump out the window, but he lived in the basement. So there's not much room to fall here. Woody Allen used to be funny, for those who don't know. And,
is he still alive?
I think he is. Here's the XLE. This is the energy stock group, and you can see it is also weak. Now, if you buy into this energy-related investments now, you're really, you're walking up the down escalator. So you're going against the trend. So gold is trending in a range with the prior 2435 as resistance. That's the prior high, and the prior resistance below at 2050 as support. Sentiment is too bullish for substantial gains, and the monthly cycle is falling, holding the gold price back. So it broke out of that. It broke out of that big rectangle. It hit a new high, then it exceeded that. But right now, we're in here's the most bullish month is September, and that's based on 158 years of data. But the dynamic cycle, which I forgot to put in here, is pointing down. So the result is you're in a big trading range with this support and resistance. And again, Ed Dewey's books, Cycles and Mysterious Forces That Trigger Events, hardcover, is currently being sold by the Foundation for the Study of Cycles at cycles.org. Now, you had asked me a question. I do a lot of mundane work, and this has not even been, oops. Well, let me try and get to. This is the report, which will probably be sent out before the day ends. And I point out that this is the national horoscope for Iran, the Islamic People's Republic, April 1, 1979. The upcoming eclipse on October 2nd is exactly opposite their sun. When this happens, it's like being run down on a soccer field. 1 minute you're chasing the ball, and the next minute somebody knocks you down, you're looking up at the sky. If the eclipse is conjunct your sun, plus or minus 5 degrees, it's a year to remember. It's a year in which you are very much impelled to achieve all your objectives. And to give you some examples, in the 2020 election, the November eclipse was opposite Donald Trump's sun with a very, very close orb. And in the prior election, that eclipse was opposite the progressed sun of Mitt Romney with a 4-degree orb, which is pretty wide. Excuse me. But events that occur around eclipses are fated. To give you an example, the AG of New York said she would seize Donald Trump's properties in the spring on the day of an eclipse. That didn't happen. So she said, well, now I'm going to seize them on this next date, which was the date of the next eclipse, and that didn't happen. And Ronna McDaniel of the Republican Party was hired by CNN the week before the lunar eclipse. She lasted 4 days because everyone else objected. So that's the effect of an eclipse. And my old teacher, Charles Jane, had plenty of examples from World War II of eclipses opposing the sun of a commander, and then his attack would fail. And if I remember correctly, the eclipse opposed Napoleon's sun when he marched into Russia. So whatever they do is not going to work out well. And I go into a lot of detail here about Israel's chart. And I thought that the most frequent, the highest probability for an assault ranges between August 27 and September 2nd.
Wow.
And while we're on this subject or in this area, if I can find the other PDF.
Hey, Bill, do you still do the military stuff with the battles?
Sure. Yeah. Well, I'd also sent you the other report, Larry, that said that by the end of July, Biden would no longer be the candidate.
Yeah, I remember that.
Yeah. So this is along the same lines.
Okay. You also said there are going to be some big surprises, most probably coming from one side of the spectrum, as I recall, which we're starting to see that already. The Democratic side.
Oh, well, I said there'd be turmoil within the party, and I imagine,
I figured you were a Democrat. Christ, how am I supposed to know? I've only known you 45 years.
Yeah, if anybody would like a copy of this Iran attack report, you just send an email to cyclesresearch@gmail.com, cyclesresearch@gmail.com, and just put Iran in the header, and I'll send it out to you.
Hey, Bill, thanks for joining us, buddy. We love
sure,
you.
Larry.
You bet. Cycles Research, Vienna, Austria. Can't get any better than that, buddy. I can tell you that right off the bat. I've known him for 44 years.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I thought I'd update you on our live trading today. We were watching the S&P today because they had these big moves. We sold this. We did the Dow Jones, of course, but this is the pattern we were looking at in the S&P. You can see we had higher bottoms. There was your ABC pattern measuring to 53.83. Now, what we were suggesting was doing the Dow Jones, because what we were looking at, the Dow Jones was a tad weaker. And as you can see, it went to the exact price that we were looking to be a seller at, which is within, oh dear, missed it by 10 pips. So we missed that one, but that's where we're looking at. We've got another trade on in the gold that I think is going to be a big winner. We missed the high on the gold by 1/10 of a point, folks. We were trying to sell the gold here at 65 and the high, at 6. Let's get the hourly up here. Sorry for the delay. Just give me 1 second. There it is right there. We were trying to sell it at 24.65.50 was our order, and it hit 24.76. 2470, 650 was the order. It's what it hit, and we didn't get filled. And as you can see now, it started to come down. We missed this by 1 tick. We missed the Dow Jones one by 1 tick. And we had a missed one in crude oil too, but we had a very small loss of $50 in the corn. And then we had a small loss in the Dow Jones. So fun day. I know the folks made some money because they had these trades lined up ahead of time. So live every day in an attitude of gratitude, and may God bless. And I'm going to check here. I've had a very long evening and day, and I've got 44 seconds left. And I want to leave this with you folks, because here is where the problem lies. It's all the margin and all the credit. I don't know when the fat lady sings. Sorry for bringing that woke out, but by golly, when it does, she's going to have a full-blown orchestra, much like Smokey Robinson, because it's going to be nasty. Live every day in an attitude of gratitude, and may God bless.